Hello, everybody. This is Trading with Liveball. My name is Stefan Choi. Welcome to the show. Basically, I made an adjustment on the screen, so it's like something in between. Yesterday was, I tried to enlarge it, but it was kind of, I couldn't really move the screens around. So hopefully this works. Should I make this a little bit bigger? And basically, just to give you guys up to date, I had a couple of call spreads in Twitter, which worked out. And as like yesterday, American Express and SPY, basically, I was long calls on both of those yesterday. Essentially, I sold half out, and then this morning I bought some more calls in SPY once I realized that the market wasn't headed down after the unemployment report. Sometimes what happens is you get this good news, the market opens up like 10 points or so, and then it just starts selling off. So I was kind of worried about that. As well as if it was a bad report, it would have just been down. And yesterday I had a pretty good day. Yeah, so I think I made like about 5,700 yesterday, and I didn't want to just give it back right away. So that's that. I know I talked to you guys a little bit about the VIX and the SPX, how I kind of look at both of them to make my trading decisions. And I want to kind of talk to you about some of the other stuff that I look at. So the stuff that I look at recently, and you know, these things change as time changes, but currently I pay particular attention to the oil prices and as well as the currency prices between the dollar and everywhere else. So I keep a close track on that. There are a couple of general themes I have. I think last year I was like bullish on the airliners and bullish on Facebook and so forth. So I have like a general kind of philosophy of where I think the market's going to go. And then I try to find some longer term bets, but because my account is so small, it's difficult to tie up a lot of your cash on long-term bets. But I thought maybe it might be good to kind of go through some of these with you guys. So obviously the thing that's the most obvious is the dollar. So you can see how the dollars had a tremendous increase. This is the ETF in the last 6 months. One of the ways you guys can actually look at this, I'm going to look at the monthly, is you see how we peaked like right around 2002, and then we've been pretty much on a bearish trend probably until maybe 2008, and then we've been kind of just going sideways. In the last 6 months, we had this huge jump. So there is likelihood that if you see this drop from like 117.5 to 72.5, what's that, 27, like 40 points or something, over 40 points, almost 45 points. Basically this rise from 80 to 93, you can almost say it's about a third of the way done. And there are a lot of people who pretty much are on the side of the dollar going up from here against all the other currencies. Of course, there are people who then are like the counter trend guys who don't want to bet with the crowd. But I think in terms of the dollar, I like it. So I would be bullish on the dollar. I'm also bullish on the European stocks just because I feel like I've seen this before with the United States. So if I look at the SPX, right? So we've had the quantitative easing 1, 2, and 3 for the last, who knows how long, like 5, 6 years, and look at what the market did the whole time in the United States. So I feel like since Europe finally decided on their quantitative easing, now I'm not talking about the Greece risk. I'm just talking about just in general. This is very bullish for their equity prices. What is not so bullish is, if you're an investor from the United States to Europe, most of the time you would be buying something like this, right? The EWG. But you see how it's not made a new high, while the DAX is at an all-time high, right? So that's because EWG, there's currency risk. So because you're actually repatriating it back from euro to the dollar, it really hasn't gained like it should, right? So I think all these ETFs, I don't think are the greatest, but in the end, it's the best you can do as a small-time investor. And I think I am pretty much would be bullish on all these ETFs that have a currency hedge. So this is the Wisdom Tree Germany. So you can see it's made an all-time high, DXGE. I also like HEDJ, which is the Wisdom Tree International. So this is mostly European. They have a bunch of Swiss companies here, which kind of stalled it a little bit, but I think it's okay. Obviously, UUP, that's the dollar. And then I'm also bullish on Japanese indices, just because they are set on devaluing. So DXJ is the Japanese hedge fund ETF, and then DXJS is, I think, the small cap, which I think might have more volatility, but actually might give you more upside. So these are the hedge stuff that I like. I think they're gonna do better than the United States. For me, it doesn't really matter because I'm not like betting on the market going up or down or going up. But if I were to like kind of buy something to hold for the rest of the year, those would be it. Of course, I would kind of wait until something happens, right? So I wouldn't want to buy it at the top range of the Bollinger Bands, maybe at the bottom range, and just be patient. The other thing is TLT. I know there's a lot of discussion on the 10-year, whether it's going to go up or down, and whether when the 10-year goes down, the yield, that's what I'm talking about, whether that's a bad sign for the economy. So you can't have that. You can't have that discrepancy of the yield keep on going down and the market going up. Somebody's wrong, right? That's kind of the consensus. My thinking is, this is a special situation because if you look at Europe and there is all these negative rates, so basically it costs you money to keep your money in the bank. And to think that Spain has the same 10-year rate as pretty much United States is, or even better, to me it sounds kind of crazy. So if I was a European, especially since Euro is going down, it makes sense that I would just invest in TLT just for the fact that, it's a good investment. So basically, if the Euro depreciates another 10%, without the TLT even moving, you'll make money. And so I think this TLT is a good bet. I think last year I actually was waiting for the TLT to go down. So I remember like this year I thought, I was going to do some strategy where I think I even made a video where I thought it was going to go to 85 over the course from 14 to 15. That obviously didn't happen. It's going the other way. And now it actually looks like it's on an uptrend. So I'm bullish on TLT. So those are like my long-term kind of outlooks for now. And then I want to kind of get in at the right time. As for my trading, so I have a American Express. They had, if you look at the earnings, I thought it was pretty good. There was a couple of things that really hurt them. Basically the currency, the strong dollar, and so forth. But I thought in general, I was kind of waiting for to kind of get back into, because I thought there could be a decent opportunity, because the earnings was already out. So basically I bought some calls here, and it's been doing well. And my biggest decision is whether to keep it or sell it, right? Same thing with the SPY. I have it here, and basically I have to decide later on today whether I want to keep it or sell it. Usually I've been kind of just getting in and out within 2 days. But in this instance, I have this desire to hold it, just because this weekly chart looks bullish to me. Plus the VIX is kind of, the VIX is a little trickier because you see how this is on a strong uptrend. So I still think the uptrend might continue. So we might have some huge sell-off. But I guess the question is, do you think the huge sell-off is going to come next week, or whether you think the VIX is going to drop even lower to this lower Bollinger Band? And I think it might actually fall lower. So that's kind of what I'm thinking. So one of the ways so I've been buying calls. So one of the ways I actually prevent the decay and the volatility risk, because there's a lot of volatility and decay risk when you just buy naked calls, is I only keep them for 1 or 2 days. That way, even if the volatility goes down, it isn't something that that's gonna hurt you for a long time. Plus, the market is kind of on, it's like all over the place. You can't really pinpoint it. So as long as the market is going back and forth, up and down, it makes it very difficult for you to just hold a position for a while. But imagine like you held this position, right? So since this year, if you held a position, you are just on a crazy roller coaster ride on the SPY, and this is only end of the day, charts. Like, I'm not even talking about the intraday where we had some huge swings. So until, like, usually when you have this kind of huge movement, it doesn't bode well for the market. There's a greater chance, in my opinion, that the market will go down versus up. But as you can see, I've been using this 30 versus 120 IV, and every time it goes down is when I usually like to kind of have a bullish viewpoint, right? So basically, like, not when it's going up, but as soon as like it dips back below, like right around here, maybe right around here or something, is when I am more comfortable being bullish. Not that I actually use these indicators only to do the trading, but I use these as one of the variables, as well as the charts, as well as all the other stuff. So one of the things that's been happening recently is when the European market closes, the US market was ending up stronger. So that wasn't the case for the first half of the year. First half, like at the beginning of the year, basically the European market held up the US market, and every time the European market closed, that's when the huge sell-off started. But in the last 3 days, I've noticed that we're actually going the other way. And as soon as you know, we have the European market close, we actually have a rally. So let me actually go to the hour chart. So before, basically, as soon as like the European market went closed, and you know, I guess I can go into it in more detail, but generally the tendency is that the U.S. market was selling off on the latter half of the day, and in the past like 3 or 4 days, it's changed. Looks like if you look at the USO, which is the ETF for the oil, it kind of stabilized. I'm still bearish on most of the oil stocks because I don't think they've gone down enough, but that's for another video blog. For now, I think this with the SPX, with all the earnings coming out, with the VIX kind of at the low range, I think we might actually have some quiet period, which means it might be pretty bullish for the stocks. The only thing that's not 100% I'm fully comfortable with is the VIX, because like I said, it's actually making higher lows. And until this is like right at the point where it can easily pop back up. So that's the decision I have to make, is whether I think the VIX is going to go down on Monday or up. So, you know, I'm still contemplating that. If I believe that the market is going to go up more, I'm going to keep my position. If I feel like it's going to go down, then I'll close. Some of the other things I look at is all the sector ETFs. So this is the consumer discretionary, XLY. XLP is the staples. XLE obviously is the energy. XLF is financials. You can see the financial is having a fantastic day today. The other ones would be XLI would be the industrials. XLB is the materials. XLV is the XLV is the healthcare sector, and then you have XLU, right? So I kind of want to see that XLU isn't too strong, even though XLU in the long run kind of moves with the stock market, but in 1 day increments, they kind of seem to diverge. So you can see money being taken out of XLU and being pumped into the technology, which is a little riskier, right? So when you see that kind of stuff happening, it makes you feel more comfortable that it's bullish. So I look at all these technical charts, all the different sectors, and see if it kind of reinforces what I'm thinking. I look at order flow and volatility always, as you guys know. But like I said, the way I'm mitigating some of the volatility risk is not having the option for more than a day. So unless like I'm betting on some earnings, usually the volatility is not going to change too much. So let's say you bought a high volatility option, and basically the market went up. What you have to do is make sure that you buy the right call. So I buy these calls, and if you can see right now, these calls are pretty much stock, right? They're not, there's almost no premium to these, right? So what I try to do is I'll buy an option that is like 60 delta roughly. So it's more like a stock replacement versus betting on volatility. Of course, there is strong volatility, but as you can see right here, it's minimal for the leverage that you're getting, right? To have 2,000, let me actually look at all the position, to have 3,000 shares pretty much as a stock replacement. And then let's actually see in my position. Yeah, and the theta of $225 is pretty good in my opinion, right? The question is these, if this was higher, and this is next week, I would actually sell it because the decay over the weekend would be too big. But since these are pretty much stock now, if you look at them, they're like almost like 75 delta or higher. Basically, anything 70 delta or higher is pretty much, you can consider it mostly stock. 80 delta or higher, definitely mostly stock. So if the market goes up or down, your bet will pretty much, profit or lose according to the market going up, not so much the volatility going down or up, especially if it's only a couple of days. Now, I wouldn't recommend doing this as much with individual stocks. With individual stocks like AXP, you have to take all the other consideration because there could be news, there could be some unforeseen announcement. There is different kind of risk, and it's higher for individual stocks versus the whole market, because the whole market, is going to go follow whatever is happening in the world. So if there is a news that will affect the market, it would have to be something that affects every stock. So it would affect AXP, American Express, as well. So that's kind of what I'm doing. So I hope this helped. Basically, I'm going to be, the good thing is I've been doing this for a year almost. And as you can see, I've had these huge up and downs. So I'm not still even sure, but you can see like since October, I've kind of like been on an uptrend, and I'm trying to figure out how to return capital and make money on trading. If I have 100, whatever, 30,000, so forth. So it's still work in progress. But hopefully you guys can kind of see what I'm doing and be able to benefit. The LiveAllX is pretty much the only software I use to trade. It's the best software around, just because you have all this information that you need to trade options right at your fingertips. So here I have all the block trades that go by that I can see, and then here I have all the individual trades, and then you can see all the volatility information. And I touched on this already a little bit with the 3120, not so much for individual stocks, but for the indices. And it's a enormously powerful tool. So I hope to talk to you guys more soon. And hope you guys make a lot of money trading. Other than that, take care, and I'll talk to you guys soon.